Welcome back, VITA volunteers. We are nearing the end of our trainings for the basic certification with this lesson, refund and amount of tax owed. And here is where we are on the 1040. We have made it through a lot of material. We learned about how to fill out the basic section where we're picking filing status and choosing dependents. We learned about bringing together all the sources of income. We learned about some adjustments to lower that income and how to calculate the adjusted gross income. And then from there, we learned about taking the standard deduction, and we afterwards learned how the taxable income is calculated and how TaxSlayer will calculate that tax on the taxable income. We also learned about some non-refundable credits that go towards that tax liability, but can't take it below zero. We also learned about some refundable credits that lower the tax liability to zero and sometimes beyond. And we learned about the payments that our taxpayers might be paying into the system as they go towards that tax liability. So after all of those payments and credits calculate towards the tax liability, of course, our taxpayers end up with either they paid more in than they needed to and they'll be getting a refund, or they didn't pay enough and they will have an amount due. And you can see here at the bottom of the 1040, we've got refund as its own section, amount you owe is its own little couple line section, and then we have the bottom part, which is for a third-party designee. We're not going to worry about that for our taxpayers. Pretty much they're going to be the contact with the IRS. If the IRS had questions about this return at a later time, they would be contacting our taxpayers, not us. The important part of the intake form that has to do with this lesson is here on page 3, and we haven't really focused too much on page 3 before now, but of course in the field this is an important page because it does tell us where our taxpayers want to get that refund or how they want to pay the amount due. And we can see that there are some options. So to begin with refunds, one of the options for a refund is that our taxpayers can choose to apply that refund towards next year's tax. And that's sometimes a good choice for those of our clients who have Schedule C businesses, which is an advanced topic. So if you're doing a basic return, that's not going to be the reason why somebody might want to apply this year's refund to next year's estimated tax, but that is the main reason why taxpayers choose this option. You know, other taxpayers might choose it too, and that's up to them. Taxpayers also have some other options that they can choose, and these get reported on Form 8888, allocation of refund, and notice that's including savings bonds purchases. So the options are direct deposit, so they can give us a routing number and an account number, and the refund goes directly into their account. Note that the refund can be split between multiple accounts, so up to 3 accounts there. And then also our taxpayers can choose to purchase savings bonds with their refund, or they could choose to receive a check. So if our taxpayers are choosing direct deposit, we need a routing number and an account number. Often this can be found on a check, which is an ideal situation when we're in the field because then we can just look at the check to enter the numbers and not say any numbers out loud. The routing number is not so important because each bank has a routing number and it's pretty much the same for everybody at the bank. They might have a couple routing numbers. But of course the account number, it's ideal if we're not saying that out loud. Note that the routing number and account number do show up right there on page 2 of the 1040 under that refund. So that's an important thing to note. You'll enter the routing number and account number in the closing screens after you've finished your return. You go into the closing screens where taxpayers elect how they want to file and how they want to have their refund or amount due. And in those screens, there's a place to enter these numbers, and then they show up on the form. So when you go to check the form later, you can check that number and just make sure that it is indeed what you meant to put in. And then I was going to mention too, aside from checks, sometimes, a lot of times anymore, our clients don't have checks, and so usually somewhere in their mobile banking app they can find the routing and account numbers, and if not, they might need to call their bank to figure that out. Note that direct deposit is the preferred method for getting a refund because it is so much safer than a mailed check. It goes right into the account, and of course, you know, the mail systems can get lost or stolen. There's a lot of moving parts there. So that's kind of one of the main reasons why I always encourage taxpayers to choose direct deposit. It's usually not something that you have to convince hard, but occasionally you do have clients that are uncomfortable with direct deposit, and you just mention the benefits and then they choose. Also note that usually direct deposit is the fastest way they are going to see their refund. The IRS says usually people will receive their refund within 3 weeks of return acceptance, but of course in the last couple of years, and we're expecting again this year, the IRS is dealing with a backlog of returns. So we definitely don't make any guarantees, and I'm always very clear with taxpayers that, you know, this is, you know, what happens usually, but, you know, I can't guarantee that you're going to get your refund in those 3 weeks. There's a lot of things that could change that turnaround. And you know, again, just explaining to the taxpayers that, you know, the IRS has a big backlog, and so you know, they might expect delays. Again, the direct deposit can be split between up to 3 accounts. The accounts do need to be in the name of the taxpayer, the spouse, if they're married filing joint, or it would be a joint account between the two of them. And always, always, always be careful to enter the correct account numbers. Double check that you're entering the correct account numbers. Our quality reviewers will also be checking these numbers, just because if the money goes to the wrong account, then it can be very difficult and quite a process for the taxpayer to get that money back, and sometimes it doesn't happen. So, so again, these are really important numbers to get right. I also make sure to emphasize this with my taxpayers if they haven't provided a check, or, you know, if they're just writing down a number from their app or from, you know, from some other location. I double check with them. I say, are you really sure this is the correct account number? Because while we're talking about refunds, it's important that we note that refunds can be adjusted due to errors. So of course in the field we're doing our very best to prepare accurate returns and doing our best to do a good client interview to make sure that we catch everything so that we can prepare a good client return. But sometimes the IRS calculates what they think the tax should be, and their calculation is different than the return that is filed, and so they have an adjustment to that that refund. And it's important also to note that taxpayers have the ability to appeal these adjustments. But if the adjustment stays that there was definitely something that was missed or that that was a mistake, then the IRS makes the adjustment to the refund. And if the refund was from a direct deposit, if the refund is increasing, then the IRS will add the difference to the to that last account that is on Form 8888. If there's a decrease in refund, then the IRS deducts the refund from that last account, and if that last account does not have enough funds in there, then they will go to the next account up on that Form 8888. And this is important to know for our clients who may be putting money into different accounts, especially between a married filing joint couple. Sometimes they agree to split the refund in a certain way. So they need to be aware of how the refund might be changed if there was an adjustment, so that they can agree how they want to handle that, or they at least have a heads up that that's how it'll be handled with the IRS. Another option that our taxpayers have for their refunds is to purchase savings bonds, and this is done on Part 2 of Form 8888. They can purchase Series I savings bonds through this method. Note that they can choose to have their refund deposited into a Treasury Direct account, which is the Department of Treasury's electronic account for purchasing savings bonds and other Treasury securities. And our taxpayers can go to Treasury Direct and set up that account. Or they can choose to purchase paper savings bonds on this Form 8888. They can purchase up to $5,000 in Series I savings bonds through this method. If they purchase savings bonds on their own through Treasury Direct, they get an additional $10,000 per year that they can invest in each type of savings bond. This is not a real common election for our taxpayers. In fact, I haven't really ever seen it in the field. But it's possible this year Series I savings bonds are paying a decent amount of interest, or kind of one of the better deals in interest that you're going to get due to inflation. So some people might have read about that and be interested in purchasing a savings bond where previously we haven't had a lot of interest. And some of our taxpayers are going to choose a paper check option for their refund. Sometimes it is because they need to have a paper check because they don't have a bank account, and so there's just really not any other option for them. Sometimes it's because that is what they are used to getting and they don't trust the bank system for whatever reason. Again, as I talked about when we were talking about direct deposits, I always go over with them that, you know, really a paper check is not a very secure method of getting your refund, because there's so many places in between the IRS and you where that check could get waylaid, either accidentally or purposefully. And then of course it takes longer. So a refund check would usually be mailed 6 to 8 weeks after the return is filed. And of course, again, we make no guarantees to our clients. We're not in charge of how that refund gets to them and the timeliness of that. and the IRS is dealing with a lot of backlog right now. So, and then the last thing you can kind of talk to your taxpayers about is that, you know, this does cost the IRS more to process, which means that your tax dollars are, you know, getting spent on this process that is somewhat less efficient. And so for some of our taxpayers, that's going to be an important deciding factor. Now that we've talked about what options taxpayers have when they're getting a refund, we need to talk about what to do when they owe. And there's a couple of situations. Either the taxpayers can pay by the due date, or they will not be able to pay by the due date. And remember, the due date is whenever taxes are due. So this is April 18th for this year. Not necessarily can they pay now when we're filing the return. So their options when they can pay by the due date are to send a check or money order with Form 1040V, which is the payment voucher. I always remember V for voucher. They can choose electronic funds withdrawal from their bank account. They can pay by credit card, but I always emphasize that there are going to be some fees associated with that. There's also the Electronic Federal Tax Payment System, or Eftps. As we'll talk about more in a couple slides, it's really more for businesses and big tax payments, so it's really not something we see a lot with our clientele. There's also IRS Direct Pay, which is great for one-time payments. They can pay cash at a retail partner, or they can pay by mobile device. Importantly, taxpayers should not mail cash with their returns. That is not the way to pay. If our taxpayers are choosing to pay by check, then they can fill out this Form 1040V. There's a selection in TaxSlayer that we can make where it says e-file, pay by check. So you would make that selection and TaxSlayer would automatically generate this 1040V voucher. Also on that voucher, or on the instructions that come with the voucher, there's a little table that says if you live in whatever state, then you send the payment to a certain address. So different states go to different addresses. So it's important to note where those are. A lot of times when I'm finishing up with a taxpayer, I like to highlight which address they will be sending their amount owed to. So they enclose their check or money order with this voucher. Again, by the due date of the return, it needs to be certified on the due date. And then they need to send it by certified mail. For a small return, I find this runs around $8. For larger returns, it runs larger. So it's important maybe for our taxpayers to know this might not be their cheapest option for paying. If they would like, taxpayers can choose to use the electronic funds withdrawal. And in that, and I noticed that this is from our 2020 tax program, because I made these slides before the 2021 program was out. But it's not so different. Basically, just like with a refund, we're entering the name of the bank and the type of account, routing number and account number, and then you'll be pushing a button that populates the amount owed. And then importantly with this, the taxpayer can request a payment date. So again, the payment does not have to come out of their accounts immediately. They can request it to be paid on the due date, anytime up to the due date without any penalties or interest. If they would prefer to pay with credit card, they can do so. They just log on to irs.gov, payments, and there's a number of different options that are offered. But when you click on pay your taxes by debit or credit card, it takes you to a screen that has options of paying through different processors, and you can see that each processor kind of has its own fee structure, so you can figure out, what is maybe the best deal for the clients and help them know what to do. But yeah, just emphasize with them that there is added fees to this. And as I mentioned before, there is the Eftps, Electronic Federal Tax Payment System. Taxpayers need to be enrolled in this before they can make a payment through this system. And as I said before, this is really more of a businesses or large payments kind of payments type. So really we don't see a lot of this in our market, the taxpayers that we're working with. To enroll, if somebody did need to enroll or wanted to enroll, they would just visit the IRS website, or they can call the Eftps customer service number there that's on the slide. And if the taxpayer would like to make a one-time payment, electronic payment, but they don't want the IRS to, keep their account information, which maybe has its pluses and minuses, right? Because if the IRS has your account information on file, like with the economic impact payments, then those went right to the accounts that were on file with the IRS. But some people are uncomfortable with having the IRS keep their account information, or they just want to make a really quick payment and not worry about, filling out extra information. Then they might choose to go to IRS Direct Pay. And again, that's on irs.gov. There's a few steps. They need to be able to provide their tax information to verify their identity, and then they enter their payment information, and then they're going to, ensure that the transaction looks correct. That's what they're intending to do. And then they're going to, need to print that payment receipt with the confirmation number for their records, just to make sure that everything goes through into their tax account correctly. They might want to check their tax account, a little while after doing this to make sure that the payment was applied. But this is also a free method for paying an amount due. And then the IRS has a mobile app, IRS To Go. So taxpayers can download this app, and you can see here that there are ways to make payments through the app, so they can just do it on their mobile device. So now we need to talk about what happens when our taxpayers owe some tax, but they know for sure they're not going to be able to pay by the due date. And again, remember, the due date is not necessarily when they're filing, unless they're filing on the due date. Sometimes that happens, but often, they're filing ahead of time, and so they have until the due date to pay before they would have penalties and interest associated with that not paying. So it's really important to emphasize with our taxpayers that they still need to file a return, because there are failure to file penalties that are quite steep. So even if they can't pay by that due date, still file the return. Once they've filed the return, they have a couple of options. They can choose to pay in full within 120 days, and there's no fee to apply to do that using the online payment agreement application. We do need to emphasize, though, with our taxpayers that they still are going to have interest and penalties charged on those payments after the April due date. So even though they're making that agreement, there's still going to be the interest and penalties. They could also choose to do monthly installment payments. For instance, if they're not going to be able to pay within 120 days, then they would need to file Form 9465. And for that, there's a fee in addition to the interest and penalties. So there's no way, if you're not paying by the due date to avoid those interest and penalties. They're just going to be there. But the difference would be whether if they can pay within the 120 days, do they need to pay an extra fee to set up an installment plan, or if they can't, then they might just have to have that extra fee. Now, it's important to note that there are also penalties for underpayment, and this occurs not at the end of the year after the taxpayer is filed, like what we've been talking about with the late payment penalty. This occurs because our tax system is considered a pay-as-you-go system. So you are expected as a taxpayer to withhold or submit estimated payments towards your final tax liability throughout the year. So if you come to the end of the year and you owe over $1,000 in tax, then the IRS kind of assumes that you haven't really been playing by those rules, right? So they're encouraging people to pay as they go by assessing an estimated tax penalty for underpayment. And aside from the owing over $1,000 in tax, this is figured when somebody has had payments in during the year that were under 90% of the current year tax liability, or it could be if their payments in were under 100% of last year's tax liability. Now, what that does is allow our taxpayers a little bit of room if, you know, in 1 year they suddenly had, you know, a really different tax situation, like they had a lot more income or they lost a credit. So as long as they were paying at least 100% of what they owed in a prior year, they won't be assessed this penalty. But if that's not the case and they owe over $1,000, they could be expecting to get this penalty. It's calculated on Form 2210, which is out of scope for our program. That doesn't mean that we can't do these returns, but what it does mean is that we will be leaving the estimated tax penalty line blank on Form 1040. That means no entries into TaxSlayer. And we just let the taxpayer know that they may owe a penalty because of this. And that the IRS will be sending them a notice about it later. So we let the IRS assess this penalty. We're not going to worry about doing it in the field. And when we do have a client who, you know, owes a bunch of money, or they owe and they didn't want to owe, we always have that opportunity to educate them about how they are really in control of, you know, how much they get in refund or how much they owe at the end, based on the payments that they are making in over the course of the year. And they can adjust those if they're an employee through the Form W-4. Also, if it's retirees, they can use Form W-4P. And for our clients that maybe had unemployment or expect to have unemployment, or they have Social Security, there's that Form W-4V that they can choose to withhold more towards their tax liability the next year. And then, of course, the taxpayers can file with Form 1040-ES, or they can add payments using some of the online payment systems throughout the year. So there are options for our taxpayers so that they can be in control of whether or not, you know, at the end of 2022, whether they owe or whether they get an amount back and how much that is. So now that we've talked about amounts owed and also refunds and the options that our taxpayers have in regard to those, here's what I want you to do. You can head on over to Lincoln Learn and answer the skill check questions. There's just 4 of them. If you are an Accounting 496 student, you can expect some questions on the weekly quiz and Canvas from this lesson. For TaxSlayer, there are no entries for this particular topic. And as always, we remember that we have our resources, publications 4012 and 4491. They are available during training, they're available during the exam, and they are available in the field.